Hey, it's Oliver Bruce, and welcome to the Unlock, previously known as Success is in the Mind. I'm a UK entrepreneur, angel investor, and neurodivergent founder, and I recently exited my first business, which I scaled from my university halls into a multi-million-dollar agency with no backing, no funding, just grit, mistakes, and determination. I want to pass on some of the lessons that I've learned, the barriers that I had to overcome, and the challenges that I'm still coming up against today. This podcast doesn't grow by itself, it grows with you. If you could possibly share this with friends, family, colleagues, anybody you're in business with, somebody that you think might find this useful, I would be greatly appreciative. Anyway, let's get into it. Connor, thanks for joining me on The Unlock. Connor Wells, formerly of L'Oreal, then PrimeTime, now Caplia.
And Dyson.
You've done all of the above. Yep. Let's just dial it back a little bit before we get into the Caplia journey, which is super, super exciting. What was your kind of background back in the day? Because it wasn't founder, it wasn't startup, it was very much working for larger organisations. How did you get into the world of L'Oreal?
Yeah, great question. Not many men work at L'Oreal. I think I was always kind of captivated by consumer goods.
Yeah.
Simply because it always changed a lot. When I was growing up, I wanted to be an airline pilot till I recognised that I'd probably get sick of being in a cockpit the whole time. But it was always something which was very trend-led. So I started my career at L'Oreal, marketeer. That was kind of my forte, then moved into kind of more commercial, more general management. But for me, I've always been trend-led, and I love to understand where the market's going, and that's how I usually make decisions. So I think, for me, something that changes so quickly, as much as consumer goods, and a company like L'Oreal at the time, they were turning over 32 billion, globally, it's a lot. Nice. Euros, it's a lot more than Caplia right now.
Yeah, quite.
But yeah, for me, it was kind of just always chasing the next thing, and being trend-led was always really, really exciting for me. I love the beauty industry. I think it's brilliant. I love consumer goods. I think it's really important. But yeah, I guess in terms of how that journey started, so I was in my dorm room in America, and that was kind of... I was going through a lot of what many other people will be going through in terms of what am I going to do next? Am I going to go down the grad scheme route, the internship, and was fortunate enough to slip through the cracks. But it ended up being a great chapter for me.
Yeah.
Set me up for a long time. Spent 8 years there.
8 years at L'Oreal.
Yes.
Why were you in America in the first place?
I spent some time out there at university,
right? Okay.
Which was great. And I've always wanted to kind of explore different places. Yeah. I think when I was at L'Oreal, I had a stint in Dublin, which was interesting.
Very good.
I was there for about 7 months. That was good.
That explains why you're so good at drinking Guinness.
Yeah, I love Guinness. Yeah. I've got a great record on Guinness. But yeah, I was at Dublin, got the youngest ever expat contract out of the UK to go out to Paris, which was my first expat experience. I had to pay for everything when I was in Dublin, and I didn't really have to pay for that much when I was in Paris. Then I moved back, and it was just brilliant. It kind of gave me that first taste of that type of life. And you know what I find really interesting is that so many people who are founders, it's a really big cliche to say that I didn't want the rigidity of being in a corporate environment, but for me, L'Oreal was one of the best places I've ever worked. Yeah. It was phenomenal. I think if you go into that environment with that level of tenacity and you do have that entrepreneurial flair, you do feel like every single... I worked at a lot of brands for L'Oreal. Yeah. So I was on the launching team of CeraVe in the UK back in 2017. That was at the time L'Oreal's biggest acquisition. It was at one point, I think they bought it for 1.6 billion at the time. That was blown out of water by ESOP when that was bought. I think it was like 2.9. L'Oreal Paris, I spent the bulk of my time. I worked in the luxury division in the likes of, Lancôme, Armani, Yves Saint Laurent, all of those, Urban Decay, all of those different brands, which not many people understand that L'Oreal actually owned. But I think with regards to I've always felt like I owned those brands, despite the fact that I'm working for this enormous engine. And I think that is really what epitomizes entrepreneurial spirit. It's kind of when you care enough to feel like you own something. So when you go into an environment that's corporate with that level of attitude, so entrepreneurial spirit, you feel like you own the brand. You would give it absolutely everything. You feel like this is, you owe your life to this company. And I think also that kind of spans back to my background as well, in terms of how lucky I thought I was at the time to get L'Oreal as an internship and then a graduate scheme and then so on. That was really, really great for me, that period of my life. And I'm not one of those founders who are like, God, I really needed to get out of the corporate environment. I had that tenacity.
Yeah,
I would go and knock on people's door. I think the first 2 weeks I went to knock on this guy called Jonathan Ballinger's door. He was the HRD of the luxury division. Now, when you're a little kid like this and you're an intern and you're just this skinny little runt kind of trying to make it in the world of business.
It's very similar to where you are now, really.
Well, I wouldn't say that, no. Stress of business takes a toll on your diet sometimes, and raising capital. But I think it was a great environment for me.
Yeah.
I got the opportunity to build so many mentors and kind of learn from the best in the industry at the time within consumer goods. And a lot of them have stayed with me throughout my entire career, which has been excellent.
Because, I mean, how does a large organisation like L'Oréal then inspire a graduate or whatever it might be in a business to be entrepreneurial or intrapreneurial, let's say?
Yeah.
Because there are so many different places that you could hide in a business like that.
Yeah, I think, first of all, L'Oréal and hiring and recruiting for a big company that recruits the best talent, not saying that I am, but I'm saying that a lot of other people who they hire are great. A lot of people have gone on to do brilliant things. They hire on pillars and they're very good at hiring. And typically you'll walk into somewhere like L'Oréal and you walk into the room and you'll see, everyone's different in terms of, their beliefs and how they feel like they should best get the work done. But there is a commonality between absolutely everyone.
Yeah.
And they do a really, really good job of hiring based on those pillars. And I think, therefore, no one hides. You cannot hide at L'Oréal. In fact, when I moved to Paris, the term that I was told, which I really love, and it was by a guy called Michael Shin, I believe that he set L'Oréal up in Taiwan at the time. He told me that L'Oréal is like being on a stage. And as soon as you mess up on that stage, it can be cut pretty short. So there's no way of hiding. I think one thing that always stays with me, and it's the most simplistic advice ever, and it was kind of an HR mantra. We were in Hammersmith 255, got a really good story about that, but I don't know if we've got enough time for today. But we were at it was 255 Hammersmith, 8-story high building, you see it when you come out to Broadway. And they always told you that as an intern, your job is to live on the 8th floor and meet people, as many people as you can. And I think it really inspired me, how to become a strong leader. I think when you have so many managers, when you're an intern level to a grad level, I think the only way to understand how to be a strong manager or a leader is to learn from people who do it really, really badly and people who do it really, really well.
Yes.
And I think that is how L'Oréal shaped me in my time. We had Vismay Sharma. He remained a mentor of mine for a long time when I was in Paris. He was the country manager. I loved how he led.
How did he lead then? How can people learn from how he led? What have you taken?
He was people-oriented. He was tough. He navigated L'Oréal through Brexit, navigated through various different European tariffs, and he was incredibly personal. He understood and recognised the talent at the lower end of the business, which would have been me at the time, and he would entrust you with it. I think entrusting people with that level of responsibility, L'Oréal is built on grassroots talent. Lots of corporate companies, as you'll know, are built on grassroots talent. And I think if you can recognise, and if you've got enough trust in your hiring process to kind of say, okay, well, these people are strong, they've got the baseline intellect level, this is one of my favourite frameworks for hiring people, baseline intellect level, that then gives you confidence. That confidence gives you the ability to think creatively and logically. That's super important to me. That's my little hiring framework, although it's really simplistic. That's something that Vismay had in abundance. And he was personal. I could go up and I could genuinely have a chat with him in the cafeteria, and ask him for a coffee. And that kind of draws back to that level of tenacity that I thought, always had me destined to become an entrepreneur.
Yeah, absolutely.
Not work in corporate.
But you're a very good leader generally anyway. I mean, you obviously moved into Dyson, then you moved into PrimeTime and became MD of PrimeTime. But let's just double click in that transition from L'Oréal into Dyson specifically. Why did you jump ship into another corporate? And then ultimately after that, why did you go into a sort of startup organisation?
Yeah, really interesting. Very simple answer. I think moved to Dyson, I was headhunted. Spent a lot of time at L'Oréal. Dyson at the time were going through a big transition. Beauty was their fastest growing division. Enormous business they had in Asia. And a massive business in the UK. Obviously, this kind of encompassed everything from, Airwrap, Supersonic, all of those tools. And then ultimately they were moving into the launch of what we call wetline beauty, so products. James Wayborn, his family office, and James, they have lots and lots of land.
They have a cricket pitch, I think, actually.
And he's probably got 10. But ultimately, lots of land. They were building their farming side of the business. You'd be in the office and they'd bring strawberries in. I was like, well, I didn't know Dyson did strawberries. But it was really strange because I'm used to looking at these air wraps, all these like vacuums, not hoovers, vacuums.
Yeah.
And you all of a sudden you just see this punnet, like 50 punnets of strawberries drop into the office. And I'm like, what the hell is this? And then I was told, and that's how I learned. But ultimately it was a big focus to play in wetline beauty. The difference with beauty being an ecosystem between L'Oreal and Dyson was that L'Oreal is a frequency buy.
Yeah.
You'll buy on average a male moisturiser 3.2 times a year.
Right, okay.
You'll buy an air out once every 15 years. And that mindset from engineering to something which is frequency-led and very salience-oriented, which you know far too much about, was a huge shift. So they needed a category strategy to enable that growth within that category. And I was a good candidate for that, I guess. Kathleen Pierce was there at the time. She used to be a president at, I believe she was a brand president for Estee Lauder,
Righto.
I believe. And the reason why I remember that is because Leonard Lauder is like one of my favourite people on the planet. Questionable character. Sadly passed away last year, I think it was, but I've read his book about 7 times. But yeah, it was that was my role. It was more mission oriented.
Yeah.
In terms of that transition then into a beer company, consumer good led, very, very low revenue at the time. I mentioned earlier on that I always did want to be an entrepreneur. I had that entrepreneurial flair. Tried to start a business tried to start 2 actually. One was called Wordy, SEO content, Uber for SEO content, which is really interesting.
Good name.
Yeah, awful now given the rise of AI, but I mean, I would have pivoted somewhere, I'm sure.
Sure you'd have got into AI.
yeah, probably. I would have actually built the equivalent of ChatGPT.
Yeah.
I would be the Sam Altman.
Exactly.
But less controversial, maybe.
Definitely.
But I think maybe more. But yeah, I think I had that. Then I had I got really. I've always loved tech. Web3 was a big focus of mine at the time, years ago.
You were very bullish on crypto.
I loved it. Yeah, I actually never held crypto as part of my sales pitch when I was speaking to people, but we did some great stuff. I went into business with 2 of my friends. We would go around various different, countries across the UK, just giving talks and how you can leverage this really strong blockchain-based technology to actually achieve or more traditional KPIs within business. So whether it's logistics or marketing or whatever it might be. And it was just really, really interesting. And I always knew that I wanted to be an entrepreneur, but I'd never raised capital. So what better opportunity for me to go into a company where I know is very cash intensive, margins in alcohol, as everybody knows, they aren't great.
No.
Very cash intensive, very salience oriented. You need a lot of money to build these companies. And you need a lot of time to get to a point of break even, particularly if you're going after scale. So I knew one of the founders. He was a really, really good friend of mine. Sam Holmes still is a very good friend of mine, very closely affiliated with my company now. I love Sam, brilliant, brilliant person. And he reached out to me. It was kind of, well, actually, I was trying to give him some advice at the time around building his team. He told me that I needed someone in marketing. And I just said to him, I was like, Sam, my advice to you, I'm a firm believer in hiring senior people and enabling them to build their own team.
Yeah.
I think one of the worst mistakes that a founder can do is go into a business, get a little bit of cash. And look, admittedly, this isn't easy, but for venture-backed businesses that have capital, I think if you pull that university student in, I mean, they'll come into your business eventually because that's really, really important. But if you pull that university student in to manage something as important as marketing, that salience, particularly as a consumer goods business and also a tech business, because I mean, distribution is absolutely everything. And they come into the company and they inevitably mess up, just like I did when I was an intern at L'Oreal.
Well, they're learning.
They're learning. But inevitably, they're going to have so many areas for development. And I think what happens, because that company is so that founder is so emotionally attached to that business, the second one of those very junior people mess up, it just creates an enormous cultural void in the company. And I think, and that is what can destroy a business. So I'm a firm believer in that. I think, when we were scaling Caplia, I think it was really, really important that I had Paul on board, my co-founder. tech ability. I didn't want someone who I didn't trust fully, and naturally is our co-founder, but I think tech is Paul's side.
Yeah.
It's nothing to do with me.
Yeah.
I might test it, but and I will.
And then hope it doesn't break because he's built it so well.
Yeah.
Exactly.
Well, it doesn't break. It's phenomenal.
And there was that transition. So Dyson is fundamentally run by an entrepreneur, right? James is an entrepreneur. He starts it from nothing, scaled it, and now it's something more than a couple of pounds. It's a big business, right? And then you moved into PrimeTime, also run by two founders. So you'd kind of moved along the journey quite sort of chronologically from large organisation to large organisation run by an entrepreneur to then maybe taking your own organisation to a level because Sam and Harvey had trusted you to essentially run it, right, as MD. They'd given you the reins and gone, let's have some fun. And let's see where we can get it. You then dialed out from PrimeTime and into Caplia. What did you learn through that PrimeTime journey then of raising capital, of hiring a team, of being essentially the boss that you have then implemented into the Caplia journey?
For sure. I think, as I mentioned earlier on, insight is everything. And insight gives you clarity when you're building a business, something not a lot of founders have. With regards to what they're building. That's actually usually one of the biggest reasons why people can't raise capital. But I think I stumbled upon the pain point of Caplia when I was at PrimeTime. We raised a lot of money. I'd say pretty easily going through those fundraising cycles, given the fact that they're so cash intensive. It would take a lot of my time. I'm talking 60, 70% of my time, minimum. And it's stressful. And the business needs it. And I think that was when I stumbled upon the biggest problem within venture-backed businesses is this fragmentation within the fundraising or the venture capital ecosystem. I think, it's across many, many levels. I think we have an issue with fragmentation in terms of, I guess, the processes that founders are going through. A lot of it they're completely new to. It's a massive knowledge gap. There's no right way of doing it.
Hey guys, sorry for interrupting the podcast, but I thought you might find this useful. If, like me, you found that one of the biggest headaches when running a business is managing money across different tools, currencies, and expenses, then I think I've got the solution for you. Incard is built to fix this headache. Incard is a new financial platform designed specifically for high-growth modern businesses. It gives you multi-currency accounts, connected banking, and smart spend management all in one place. The really cool part is the rewards. With Incard, you earn up to 2% cash back on things that you're probably already spending money on, like advertising, SaaS tools, and travel. Every time you spend, you generate points, and you redeem them instantly for cash directly in the platform. So if you're building or scaling an online business and you want a smarter way to manage your finances, check out Incard using the link in the description. Thanks so much for taking the time to listen to this. Let's get back to the episode. PrimeTime raised millions. Dyson, not necessarily that you were involved in raising money or anything like that for them, but the learnings that you implemented in PrimeTime, the issues that you had to overcome, how you raised the capital you did. What is the process? When do you need to go out and raise? What does that look like?
I think there are questions you need to ask yourself first. I think you need to recognise the level of strain that fundraising puts, not just on your business, but on you. So if you're going through a fundraising round and you're a traditional founder, the stats are against you. It'll take 50% of your time. That's an official, it sounds very convenient, but that's a stat. Founders who are raising will spend 50% of their time raising capital, not building their business. That's counterintuitive. It's not to the founder and just the business, but also the investors who are coming in. That was one of the biggest reasons, by the way, why I built Caplia. But I think in terms of timing, it really depends because there's such proximity is a lot in venture. That proximity, what I mean by that is if you had an enormous checkbook and I knew you, my raise wouldn't be very long.
Correct.
I could close that quite quickly because I'm sure that you'd invest in my company.
Oh, definitely.
But if you don't, then you're looking at anything from a 4 to 6 month cycle. That's grueling and it's absolutely brutal.
Yeah.
I had a meeting with a founder psychologist actually on Monday, and naturally, we've got a lot going on at Caplia at the moment.
Yeah.
And we're not even fundraising. And she asked me 3 very simple questions. She said, when was the last time you drank water? When was the last time you had 3 meals? When was the last time you had a full night's sleep? And I'm not the sort of person to boast about working hard. I tell people if I'm working hard, if they want to know. and I tell people if I'm actually doing okay,
Yeah.
because I look at work in peaks and troughs.
Yeah.
But ultimately, I couldn't answer any of those questions. I didn't know when they were. I couldn't remember the last time I had 3 meals. Water, Christ, I don't think I've drank water for about 3 weeks. But I think it's, imagine that, and then place on top fundraising. We're talking unbelievable levels of resilience that you have to have. Fundraising is not for everyone. When so much of your focus needs to be on demonstrating that positive momentum, we've got this listing, we've got a meeting with so-and-so, we've got a meeting with here, and we've got this person who's like interested in investing, and like you're trying to stay, you have to stay in such a positive mindset.
Yeah.
But when 99.5%, which is the official stats of companies that get through to IC and actually get an investment off the back of a venture capital firm, that means for the 15 meetings that you're having per week with investors, that means that a lot of them are saying no to you.
Well, most, yeah,
And
absolutely.
yeah, and well, yeah, I mean, 14
It's
points.
ruthless.
So, and I think it's like, it's really hard to have that constant no. And, naturally your head, because you're emotionally invested in these companies, naturally your head is going to think, well, God, I've got a really shit business.
Yeah.
But actually you haven't.
No.
But that resilience is critical.
Yeah.
And if you don't manage it carefully, you're not the right person for that, then it can really set you off on a bad trajectory. So I think, those raising cycles can obviously, they vary in size.
Yeah.
Depending on your background and who you know and everything else. But ultimately, you're looking at a good 3 to 6 months of brute force.
Yeah,
work.
no, for sure.
Yeah.
And it does take its toll, but arguably you need to be 100% in the business, right? And if we were to dial it back to your PrimeTime days, and Sam Holmes, who I know quite well, I knew him before I knew you. Yeah. I ended up working with Sam Holmes, and then we obviously met. You came to me with this idea for Caplia, and it kind of went through the motions of actually, if you're going to do Caplia, you need to be in Caplia 110% of the time. And Sam said to me the other day, if I'd never met you, Ollie, Connor might still be at PrimeTime. And the reality is you did jump ship to go into Caplia 100% because you knew you couldn't fundraise on the side whilst also MDing PrimeTime, right?
Yeah.
When is the right point? Because you were not being paid, you were in that limbo period for quite a period of time before you raised the capital to go, right, here we are, off we go. But there was a point where you were essentially in Caplia, it didn't have any money and you hadn't raised anything.
Yeah.
What does that feel like as a founder, to be employed, jump ship, have nothing, and then eventually unlock something?
It's okay if you make decisions based on really strong signal. So let's rewind a little bit and I'll tell you a little bit about, you know all about this, but the founding of Caplia. So obviously stumbled upon a problem, fragmentation. I've also not been a fan always of the allocation of capital amongst people. Given, my background, I'm not from an incredibly rich family. So naturally I kind of started with a bit of a step back in that regard from a proximity perspective. And it was always a passion point of mine. So stumbled upon that pain point, knew that there was something that needed to be done, bringing that level of structure, clarity and speed to the venture ecosystem. And I then sat there, had a few beers with the local.
We did.
And kind of had this, kind of ideated something in my head and just thought, well, this could be a really interesting concept. And if I'm going to do it right, I need credibility, I need distribution, critical for a tech company now. Yep. I almost thought through it in my head like a consumer goods business. And lots of the ways that we activate as a business are like consumer goods brands, naturally as I would. But I then thought, well, I need this credibility. So I sent an email to who now is a very dear friend. He sits within the business, Professor Thomas Hellman. Thomas Hellman is professor at Oxford University, Said School of Business, and he is a globally recognized expert in venture capital and entrepreneurial finance. He's single-handedly played an enormous role across the venture and the entrepreneurial ecosystem at Oxford University to quite an extraordinary level. And I reached out to him with this idea. And my idea at the time was essentially that kind of that one truth that every founder needs to find when they're fundraising in terms of their readiness. Capital readiness is a problem. There's a big knowledge gap in fundraising. And I think...
Just double click into that capital readiness piece. What do you mean by that?
Capital readiness is essentially you having the confidence that you are ready to raise by the time you get into the door of an investor. So we're talking fundamental product, market fit, foundational readiness. Do you have the right documents available? How are you presenting them? What does your cap table look like? Is there anything that's going to scare an institutional investor? And readiness, capital readiness, isn't necessarily just about, okay, well, I'm leaving university, I want to start a business, I'm going into my pre-seed now. It's actually so much more than that. There's a very big difference between capital readiness, between a pre-seed level and a Series A level. You've got different investors want to see different things. So we kind of wanted to bring a level of structure and clarity to what that readiness looks like. And that was part of the fragmentation in terms of, every investor wants something different, but they kind of want the same. And I think we would serve ourselves so well in terms of even the wider economy, because we know how much private markets impact the wider economy. I think we'd serve ourselves so well if we got to a level of consistency with those things. So ultimately, I had this email idea, sent this email off to Professor Hellman.
It was the best email I've ever read.
Thank you.
It was very
Appreciate
detailed.
that. Yeah, well,
It took you about a week to write.
I don't mind long emails. No ChatGPT.
No ChatGPT.
Do not write emails on ChatGPT.
The M dashes.
Yeah.
That's the
Oh my
issue
God.
with ChatGPT.
Or at least get a prompt to get rid of those. But yeah, I sent this email and really wasn't expecting to hear back. And I think as well that kind of comes back to my tenacity, might be the wrong word, but me kind of being like, well, you know what, I'm going to knock on the door. If they don't answer, it doesn't matter. It's still going to put me in good stead, and at least I can say I tried. I'm a no stone left unturned mentality kind of guy.
Yeah,
I've always operated like that. And he responded.
You did.
And it was really interesting. He also responded. He gave me this. He also sent me this paper, which was titled "AI in VC: Hellman et al." And I read it on a Sunday morning, and completely lost it. Thought, wow, I mean, this is pre-published. I don't want this to get out there. People start businesses off the back of published papers, particularly from someone like Thomas. And I thought, well, this is, quite something. Anyhow, had a meeting with Thomas. We went through kind of everything. He sent me this paper, and then he said, okay, well, let's meet. Let's see if we have chemistry. And I went to Oxford, met him at in the Thatcher wing of Oxford's Science Business School, and I was just pushing so much for what's the next step? Am I going to get a commitment from you? Can you partner with me on this? And can you help us? And so I just asked him. I was like, well, what's going on, Thomas? Are you doing this? Or because if we do this, I'm handing my notice in next week.
Yeah.
He said yes.
Yeah.
And I did. And that was the founding, really, the true founding of Caplia, outside of speaking to the likes of you, refining the concept and making sure that we had something that was venture ready and scalable. And I think what Thomas gave me was the hunch that every founder needs. And
it was also product market fit, right? You could see within the white paper that there was a definite requirement.
Exactly. It was a lot more than a white paper.
It was a Bible.
It was. Well, 22-page Bible. But yeah, for me, kind of back to what I said before, that was the signal that I needed. Signal is everything. We talk about signal a lot in terms of capital readiness and kind of having the right signals in place so that an investor can spot them, which is why we built the Caplia Passport.
Yeah.
But signals are also for you, because you're constantly trying to, in those very, very early days when you're just mapping everything out, you're almost trying to convince yourself. And you have to stop yourself from doing that, because that's really dangerous. So going and getting that external perspective of people who are credible, who've been there, who have a very objective view of your company is super, super important. So my signal was Hellman. And it was kind of the belief that he had in my little idea at the time had some legs, for lack of a better term. It sounds quite simple.
Yeah.
And Thomas is heavily interested in multiple different facets of venture, human-led venture and behavioural theses. So that's something that we're building into the platform at the moment. He's very passionate about that. He's very passionate about ethical AI, which is super important,
Fair.
naturally, particularly within the VC space. And he's got some incredible ideas. So having someone like him by my side was enough to keep me relaxed over that Christmas period when I was trying to raise, but everybody had gone on holiday and you're sat there thinking, oh my God, like, well, how am I going to get this money in?
Yeah.
But
There was the other
I
unlock
always
as well.
sat there confident in the signals that I built for myself. Sorry.
No, I was going to say that the other unlock I think for you was also the validation from Paul Dodd, who's now your co-founder and CTO, right? Who had scaled a tech business called Habu, taken it to $1 billion in terms of valuation, and he very much jumped in with both feet, very quickly.
He did.
I mean, he's bullish on AI, but he was very bullish when he
Paul
noticed.
is one of the most extraordinary characters I've ever met in my life. I found out 2 weeks ago that he's like some robotics expert, and he goes around giving like expert talks on AI and robotics.
I think Paul is actually just a robot.
You know what, really wouldn't surprise me. With better human skills. But
I don't know.
I think, but that was a huge signal for me.
Yeah.
Huge.
Yeah.
I went into discussion with Paul. We could talk for hours about choosing a co-founder, by the way. I think it's really important. That's something that I consulted really heavily with Professor Hellman on, which is an entirely different topic. But with Paul, we kind of had this calling off period, for lack of a better term, where we kind of said, okay, well, let's see how it goes. Let's see if we gel, we click. It's like a marriage, right? Everybody always says that. It's a little bit cliche, but it really is true. I speak to Paul a lot, more than I speak to my girlfriend. I live with her.
I know.
But I think it really is. It really was special to have him on board. I mean, if you look at the journey that Paul's been on with Habu, still a business, heart still beating today, co-founded, was a CTO. Paul's won multiple different awards. He played an enormous role in innovation, the fundamental architecture of that company, which scaled to, I believe they had a valuation at some point of $500 million. They raised over 100 million in venture capital. So having that technical ability to be able to come into the platform and take a very intuitive approach to building something for, AI for the venture ecosystem was actually so helpful for me, because then I'm not just sat there with some agency CTO telling them, first of all, this is what the venture ecosystem is. Please, can you build this?
Yeah.
It really helps.
Your founding team is fundamentally built up actually of founders that have been there and done that, which is so rare for so many.
Yeah.
Often a founding team is net new founders, right?
Yeah.
And you had them on board before you'd raised any money.
Yeah.
So just talk to me about that process. You had Paul on board, you had Thomas Hellman on board, and you were obviously in the business as well.
Yeah.
No capital raised. The process to get to the capital that you did eventually raise, what did that look like, and how did you go along that journey? Because it was a pretty quick raise, right?
Yeah,
it
2
was
weeks.
Exactly. And a couple of WhatsApps. Again, proximity, I get that.
Yeah.
Just talk to me about that a bit.
It was... Proximity played a role for me, for sure. I mean, I did raise off the back of my Caplia passport. But I think you have to do your homework when you're building a business. I think you have to understand. I was very lucky because I knew what the core signals were in terms of the fundamental building blocks of building a company. I'd seen it being done in billion-dollar companies that I'd worked for before. I've seen it not be done right in other companies that I've sat close to, and I've seen it being done very well in smaller businesses that I've been managing director of. And I think having that knowledge enables you to build something that's bulletproof in terms of the problem, the solution. What is the deep-rooted pain point of this? And then, who's your ICP? How are you going to take this to market? What people around you do you know that can support you taking this to market? And Ollie Bruce. But I think all of those different things play such an enormous role in terms of you turning up with credibility. I mean, if a founder is turning up to an investor room or someone that they want on their founding team desperately want, like Paul Dodd, and you turn up with zero credibility, no understanding, no confidence, you're starting on the back foot.
You are.
That's why we built Caplia. We're trying to put every single founder who's raising capital on the front foot from day one. I'm organised. Here's my signal. My data room's in check. This is why we need to exist. This is our unfair advantage. This is who we have on the team. This is why they're suited well to build this company. That's critical. Not a lot of founders actually have that.
No.
And I think that was the difference between me being able to go to the likes of Thomas and say, look, here's what we're doing. It's an idea. It's pretty much a plan on a page. But I didn't go into that meeting with that. I went in saying, look, here's my idea. This is why I think it'll work. This is my hunch. These are the people that I have around me, and here's my experience.
Yes.
Oh, by the way.
Yeah.
And that's,
Yeah.
I think, how I managed to do it. In terms of fundraising, I think we could have gone institutional. We didn't.
You could have raised more.
Yeah, we could have. We oversubscribed by 22%.
What did you raise in the end?
We raised, what, in terms of cash?
Yeah.
429.
On a what valuation?
On a 2.4 mil.
It's reserves.
Valuation. It was, yeah.
Yeah.
So we originally went out to raise 350. Aligned to my financial model, that was going to give me about a year's runway. Runway forecasting is interesting when you have a business at that early stage, because you never really know. You never really know. But it's just having that confidence in yourself that you've actually done the work and you've done it properly. We raised that capital, oversubscribed by around 20%. We've got some great investors.
Really
Kept a cap table really, really lean, which is super important for us. And one of my investors, co-owner of Runner, very strategic for us. Very good when it comes to community and building that ecosystem, which is super important in fundraising, by the way. Founders need to be within a community so that they know that other people have their back. And then the other person, sales president of an ed tech company, very tech based. I speak to Richie every single day. I can always, every single evening, 7:30 will come. Usually just about the time of my dinner's at the table. The one meal I have a day. And
with water.
Yeah, with no water.
No water.
And I'll get a call from Richie.
Yeah.
And it is critically important that founders have the term strategic cap table. It doesn't have to be that strategic. It doesn't have to be someone that can completely revolutionize the business. That can come later. Richie and JP both can revolutionize the business in their respective ways. And I've got another investor as well who has and is revolutionizing the business. But I think it's more about the moral support.
Yeah.
I think that's the biggest difference with working in a company with a team to working in a very, very small company, remote most of the time, and being sat there thinking, I'm about to embark on this next fundraise. To have someone who knows the business and who knows you and who you can be upfront with. I mean, the conversation that Richie and I had, this was back at PrimeTime. I used to be a board member at PrimeTime. Conversation that I've had with Richie is, and I've done this with every single manager that I've had. Hello, I'm Connor. This is what I like. I'm extremely emotional. In terms of management style, I'm firm, but I'm extremely fair. And this is how I go about business, because I've learned so much about myself over the last 12 years. And to be able to give someone else who's working with you and coming and joining you on that journey, such insight into you and how you operate is critically important.
Guys, I think I found something that might be super useful for you and something that we've started using in my businesses. It's called Incard. It's a new financial platform designed specifically for high-growth modern businesses. If you're running a business, you've probably found that one of the biggest headaches is managing money across different tools, currencies, and expenses. Well, Incard gives you multi-currency accounts, connected banking, and smart spend management all in one place. The best part? You earn up to 2% cash back on everyday spend, such as ads, SaaS, and travel, earning you points every time you spend, meaning you can redeem them instantly for cash in the platform. Check out Incard using the link in the description. If you're building or scaling a business and you want a smarter way to manage your finances, I think this is the solution. Thanks for taking the time to listen. Let's get back to the episode. You also somewhat sort of developed a bit of a rocket ship. I mean, you're talking at the moment to the likes of Google from a startup scale-up perspective. You're talking to Opus in terms of the easies. There's tons of exciting things that have really only happened over the last probably quarter or two because you've just turned it on and off you go. So
we'll sit here and think, okay, well, he's got Professor Thomas Hellman on board. He's built his Caplia readiness index. The amount of people that have asked me if I've gone to Oxford, I bloody wish.
Yeah.
Like, I wish.
Yeah.
You
have gone to Oxford, but just physically, briefly.
I've visited. But had lunch there a few times.
Done a bit of punting.
But the amount of people who will think that, I've come from a background where I had that level of backing, or who think that, I've met these people through family friends, which there is nothing wrong with at all, by the way. But I just want to make it really clear that that is not the case. And that has come through me having brute force a brute force in terms of, okay, well, this is what I want to do, this is where I'm going to go. And if I'm literally pushing my career, which I value so much, to the side, and I'm taking this transition to something else, that no stone left unturned mentality is critical for me. It's not for anyone else, for me. And I think, obviously, that has then opened doors to, like, we're launching across OSEC, which is the Oxford Science Entrepreneurship Centre. And all of their founders are going to go through Caplia. They're going to manage their applications through it. They're going to manage how their founders are progressing towards readiness through the platform. That gives us a great case study. That enables us then to go knock on other people's door. And I think that really has been it. I think it's kind of, I'm obsessed with design partnerships. So if people are watching this and they're in tech and you're looking to start, I think the best piece of advice that I could ever give is find design partners and find them quickly. I mean, there's a lot of people who will go and build something very similar to Caplia, not on an infrastructure level, but more of a tool.
Yes.
And they'll go to a really subpar partner thinking, well, they're not multinational, they're not that big, so they're probably going to say yes. They might also like playing around with us from a design partnership perspective, and we can probably get somewhere from that. No, it's completely wrong. If you believe in your idea, you should believe enough to know that this can benefit something like OSEC, someone like NatWest, Barclays, HSBC, all of these banks that have these amazing accelerators and these vast
But all
venture
conversations that
ecosystems,
you're having right
for
now.
sure, yeah.
You know, with blue chip
Exactly,
blue chip
but
banks.
that's the point. I mean, that's come because I've been able to deliver really strong design partnerships with companies.
Yeah.
You design those partnerships, you take the case study, and then you move forward and you have pure faith that what you have is strong,
Yeah. Yeah. Yeah.
stacks up and legitimately drives value.
But one of the key validators as well was the fact, you know, only the other week were you down at the London Stock Exchange with the AI Sovereign Fund. Like, that's unbelievable. You managed to access a market within a 6-month period and immediately literally be within the stock market, the sort of hub of England, if you will, from a financial perspective. How was that? I mean, how did that get unlocked?
Do you know what? The venture ecosystem at the moment is absolutely fascinating. Genuinely fascinating. You know a lot of founders, Ollie, and I think it really is incredible. So if you look at where we are today, capital is being mobilised at a serious rate.
Yeah.
Last year on record, it was the second highest year of capital mobilisation globally across venture capital. So money's entering the ecosystem. If you look at the US, back in the 90s, there were 700 VC funds operating across the US. Today, there are 3,400.
Where's the money
lot.
going, though? Where's it getting put?
So that money is going into founders who have tripled in volume in the US and the UK, both tripled in volume from the 90s to now.
Yep.
So there's an influx of founders. Capital's being deployed. It's a really healthy ecosystem. And we're set up for this golden era of success where it comes to, I mean, I was reading an article, it's the World Economic Forum just released their May venture capital growth report. It's phenomenal. Slightly worrying in places, but it's phenomenal. And it's kind of that people don't recognize how much the private market contributes to the overall economy.
Yeah.
Which is why now you see things like the Sovereign AI Fund launching, and you see government supporting these various different initiatives, because that's how we're going to grow the economy. There are multiple different ways to do that. But
their thesis is to find the next ChatGPT and OpenAI
yeah, for
kind
sure.
of business.
But if you look at the UK, I mean, the UK invented the World Wide Web.
Yeah.
Like, we've got a pretty good track record on this stuff. But I think it's a really interesting environment. The only problem is that despite the fact that capital's being mobilised, despite the fact that there are more founders coming into the market, we're still running fundraising rounds like it's the 90s.
Yeah.
And it's a problem.
Yeah.
We've still got a screening issue because investors are completely bewildered by the noise in the market.
Yeah.
So you've got more founders coming in. A lot of them don't have clarity. They're shoving pitch decks in investors' faces. And ultimately, that investor is then going through that pitch deck manually to try and extract the signal, overlay it onto their thesis to figure out. And by the time they've done that, they've missed 3 great deals.
And similarly, they could have also
their business.
had a bad day and not necessarily even be reading it correctly.
100%. And I think that is a major problem. If we continue to raise those fund rounds like we did in the 90s, if we continue to screen, continue to fundraise similar to how we did in the 90s, we're going to miss out on this golden age. We really are. And it's a problem. The economy will miss out, the UK will miss out. And this also, by the way, doesn't take infrastructure within fundraising. It doesn't take something like Caplia that brings that speed and that structure and that clarity. It's not just that. I'm talking regulatory change. I'm talking taxes around equity. Regulations with regards to, well, we can all talk about exiting. You've got a very strong opinion about that. But we can all talk around, founders creating. I mean, the sovereign AI's entire mantra is that they want to empower more businesses to start here, build here, and scale globally. Yeah. That's an impressive way of saying, this is how we want to empower the next level of entrepreneurs. But if you look at the venture capital allocation to female founders, for example, 2% in the US, 10% here, 10% in Europe. That's 10% of all of the venture capital funds going to females.
Yeah, remarkable. Too low.
Now, how do we fix that? How do we fix it? Do you know?
Go on.
Caplia.
I like it.
We give every single person, every single founder, the ability to raise on the front foot.
See further, move faster.
Oh yeah, but also we want to give founders confidence. That's critical. Confidence means so much when you go into a fundraise. Fundamental understanding of the signals that an investor is looking for.
Yeah.
Critical.
Yeah.
Giving investors something which is decision ready, not something that is going to completely ruin their day in terms of time that they're going to spend on it.
Removes the subjectivity somewhat from the whole investment process. It does. Because there's so much more data and kind of KPIs within place. And I guess that Caplia passport piece, which is so unique, right, in terms of how you guys have developed the Caplia passport and what that actually means to founders. When we were speaking back in the day, Experian give a credit rating to a business, to a person, to an individual, right? Credit Safe do the same.
We had to pivot from that point.
100%.
At one point, but
the point is, it's you are kind of going out and saying this founder is capital ready, as you've already said. The Caplia passport somewhat underpins that as a kind of route to, if that makes sense.
Look, ultimately, one of the biggest challenges that investors have is that if I'm talking now pre-seed, seed, because your business changes a lot from pre-seed to seed on many occasions. I think I know one of the biggest challenges that investors have, that they are consistently spending lots and lots of time on businesses or founders that aren't ready for capital. They might not match the thesis of that VC. That's another one. One of the biggest falldowns, and the reason why a lot of founders waste time raising capital is because they're not looking at the fundamentals. Like, do we fit this fund's thesis? Every single fund in the world, the majority of them, I'd say 90%, will have a thesis online. And if not, you can use our discovery tool. But but every single fund will have a thesis online. It takes 2 seconds. Just check it. Before you go through that application form, before you reach out to the GP on LinkedIn, just check it, because that will save you so much time. Yeah. But all of these little things are pretty critical. But the role of the Caplia passport is saying, as I mentioned earlier, hello, Mr. or Mrs. Investor. Hello, investor. This is our business in its best form. These are the signals that you want to see. It gives them decision-ready signal at their fingertips. And should you want to go further, my data room, my cap table is just a link away. Yeah. Just a click away.
That's the unlock. And I mean, at the moment, you've got, 10, 15 new founders every single day signing up to the platform.
Yeah.
You've only launched basically a month ago, publicly, give or take. Very lovely, shiny new website. Talk to me about the easies and how that's working with Opus, because that's properly exciting as well.
Yeah, mega exciting. Well, the easies is a really great, really, really great way for us to get immediate distribution. We've partnered really, really well with Opus. Opus is, for anyone who doesn't know, Opus is 1,000 founders globally across multiple different markets. And they have a phenomenal roster of founders. Yeah. A phenomenal roster. Opus is kind of an umbrella. They've got multiple different areas. So they acquired a company called Embark. I believe they bought them from Notion Capital last year. They're looking to bring on a lot of founders. I mean, that ultimately it's capitalizing on the fact that there are lots more founders coming in to the market. And in true Opus form, they're trying to give them visibility and a voice.
Yeah, access.
Which is, by the way, what they do best.
Yeah, they're very, very
They've
good.
done such a good job
Yeah.
of Caplia with that. And we're essentially plugging in as their assessment layers. So essentially the process and how it'll work. And this took some thinking through, and it took a lot of brain cells from Paul. But first of all, to get the platform built and then figure out how this was going to work.
How it's going to stand up. Yeah.
Ultimately, every single founder that applies will go through, obviously, the Easy's application form. They then get dropped into their Caplia workspace. So when you do onboard Caplia, it's typically we'll take your pitch deck, or the Caplia robot will take your pitch deck, and then it will essentially turn it into a fundraising passport. Now, we want every single person in the Easies who are applying. Now, we're talking, this could be a lot of people, without mentioning any numbers, but a lot of people. All of those people get the ability to be dropped into Caplia to have one place to manage their entire raise and understand their readiness.
Yeah.
That is an amazing tool.
Hasn't been done.
It's an asset for them. It's never been done.
No.
And I think following that, we will then, Opus will use us, the Easies will use us to kind of go through each of those various different talents and figure out the level of readiness, whether it matches their internal kind of rough thesis. And that's so they're going to be using it from that perspective. But the thing I'm most excited about really is giving all of these founders something that I genuinely wish I had when I was raising for the first time and I was learning about it.
It'll make it so much more simple. And the fact that you've also got that sort of AI consultant, if you will, within the platform called Iris.
Yeah.
How useful is that? And what does that actually do that's so unique? Because it
God, I love
remembers
Iris.
and does everything that you'd normally do in terms of shareholder updates and writing notes and such. It just remembers the process and then deploys it.
Well, Iris is fully agentic, which essentially means that it just relies on different tools, or it can speak to different tools to give you the right answer. I think the most important part about Iris it's contextual, but in a very safe way. And ultimately, for example, at the moment, I'm discussing with a behavioural psychology expert because a big plan of ours is to build behavioural psychology into the platform in a very strategic way. And here's where I see it, and I think this is actually quite a good way of putting it. For many different industries who are leveraging AI, given the different customers and the different areas that we span across the venture ecosystem, we want to be the AI platform for venture. LLMs are very intelligent, very intelligent. But when you're trying to close a round for your company, you don't need your LLM to be able to speak Hindi or tell you the ABC backwards. Like, it's just not something that you need it to know fundraising.
Yeah.
Rogo, a great example of this. Big company, US based, the AI for finance.
Yeah.
You hear them talking about this a lot. Yes, ChatGPT, Claude, brilliant in terms of depth and breadth, and that's all really, really important stuff. But ultimately, does it know about finance?
Yeah.
And that's what they do. They still build on these LLMs. It's not like they've trained their own lab, but they have just prompt engineered is probably a very loose, simplistic way of, they would probably hate it if they heard that. But they have just built around these LLMs in a way which is absolutely bulletproof, and that's why they're doing so well.
Yeah.
And they are now trusted by some of the biggest institutional banks on the planet.
For sure. And I mean, if I'm a founder and I'm listening to this, even if I'm a VC or whatever I am and whoever I am listening to this podcast, if I want to go to Caplia and if I actually want to build out my theses, put in the Caplia passport, get ready for fundraising, what do I do? How do I do it?
So you don't need to be hell-bent on the fact that you're going to fundraise.
Fine.
By going onto Caplia. You don't actually need a pitch deck, so you can actually get onto Caplia by entering a website URL. And then that will give the platform enough context to give you the right answers back in terms of being like a fundraising mentor. Outside of that, if you are raising, get onto Caplia, put your pitch deck in, we'll generate you a passport in 60 seconds, or Iris will. But then you refine it.
Yeah.
And then you upload your materials. Caplia becomes the place where your fundraising materials live.
Yeah.
And you can share it. And when you do share it, you're putting your best foot forward. So that's That's really it. We wanted to make the platform super accessible. That was really, really important.
Yeah.
There will come a time where Caplia will be free for founders. I'm really passionate about that. My investors of the future probably won't be as passionate, but I'm really passionate about that because I don't think that level of access on any way, shape or form should be paid for.
Mm-hmm.
I think, if we can get to a place within the UK whereby capital is mobilised, we can get to a place where more founders are coming into the market and we can bring a level of structure, clarity and speed to fundraising and to the venture ecosystem, we will be in a much better place. Founders will be in a better place.
100%. I love it. I love Caplia. I think it's amazing. I'm stoked to be on the journey. I think it's such a cool proposition run by, a cool individual, so to speak. Questionably admitted.
Really wouldn't call me cool. My girlfriend wouldn't call me cool.
At all.
So you
at
can.
all. But no, man, I think it's really, really cool. And anyone that wants to go over to Caplia, bang it into, I guess, wherever they want to bang it into, and you guys will load up. And Con, I appreciate you jumping on. I'm conscious of your time, but super excited to see where Caplia goes.
Yeah, thank you, mate. Appreciate it.
Appreciate you listening to the podcast. Hopefully you found it useful. For those that want to read up or learn more, head over to my LinkedIn page, Oliver Bruce Online, where you'll find a weekly newsletter called The Brucey Bonus, where we double click into more detail and give you more tips and tricks around how to scale your business. If you want to share this with friends, family, colleagues, business owners, people that are in your circle and might find it useful, I would be super appreciative. If I said at the beginning of the podcast, this does not grow on its own. This grows with you and we do it for you. So thank you so much for listening and catch you next time. I mentioned it earlier, but I do think something that you guys might find super useful if you're running a business and managing multiple transactions across multiple platforms is InCard. It's a new financial platform for modern online businesses, giving you guys multi-currency accounts, connected banking and smart spend management all in one place. You can open up an account in minutes, attach cards for expenses, and earn up to 2% cash back on everyday spend, like ads, SaaS, and travel. Check out InCard using the link in the description.